Welcome back to the Eric Krown Crypto channel. Wishing you a happy early start to this like Good Friday. It's a Good Friday. It's a holiday Friday is what it actually is. And of course, it is a holiday in the US for good old Friday. So happy Good Friday, all the celebrators out there. Happy non-Good Friday, or happy just regular Friday to all the infidels. Yes, the heathens. That's right, you pagans. How dare you? Anyways, today wanted to go over the higher term time frame setup that is likely to beget the next major move, probably taking us into the end of April here, and thread that into the lower term time frames because there is a bit of a different setup between lower term time frames and higher term time frames, obviously, as is kind of natural. And then I want to once again give the highlight to Bybit because they got their 0% for maker fees for derivative contract orders. Promo still going. If you use the affiliate link in the description below, it'll even get you the Jewel Light for free for the first 30 days, and will also lock you into the lower price point, of which it will be raised in the next in a little over a week now, actually. So just want to make sure that the community has full and advanced warning of such things, because once it changes, then it changes. But if you do get into it right now, or if you've had it prior on your current plan, the price will not change. It will be the exact same for you. Obviously, we're not going to just jack it up for somebody who's already subscribed. But for anyone who goes after the 15th of April, then yes, it will be different. All right, cool. So let's just jump right into it right now, starting off with the daily time frame. So this setup is maturing rather fast. I think that we're probably going to see this one fire off probably early next week, maybe this weekend, but probably early next week. What essentially is the setup? It's one of those damned volatility versus stochastic momentum setups, which is likely to, historically speaking, get us somewhere between like a 15 to 30% move, with the average around 20%. But in this case, it is becoming very, very relevant here. So the daily time frame, looking at volatility, represented by the BBWP indicator, is nearly at extreme lows. Why is that relevant? Because once it gets to extreme lows, as volatility is naturally programmed to do, it will expand, just like you saw over here, just like you saw over here, and so on and so forth, many times over the past few years, or even over the past few months, as we've been going over these things like pretty incessantly. Anyways, in this case, this one is nearly giving the first major warning that the setup is emerging. And again, we can see that the BBWP is basically at 10 percentile. Once it kind of bases around this region, then we look for the expansion phase, similar to what we see right here, similar to what we see right here, where the BBWP gets a positive slope back above the 10 percentile and also above the moving average. That is when we can say that volatility is surely expanding. And then we can go and reference the direction of the stochastic oscillator, which has a high correlation to the direction that price will typically go alongside volatility expansion. And so once we've seen volatility get down below this 10 percentile area and then expand from there, there's been an average move of about 20%. If we go and reference all of the back-tested data here, I have it for both the long side and the short side. We'll look at the long side first. We can see over the past 4 years or so now, there's been, about 4 years, 4 to 5 years, I should say, there's been 14 iterations with that particular setup. And the direction of the stochastic oscillator has been correct in getting the direction of volatility expansion 12 out of 14 times. So a pretty damn high hit rate right there, just under 86%, which has had an average return of just around 20%, or a little bit above 20%, with a standard deviation of about 5. So giving us a range between about 15 to 25, actually. Sorry, not 30, as I said before, but 15 to 25 or so, with the average again at about 20. Over the course of an average about 10 days, a standard deviation right there about 3 days. So, we're looking somewhere around like a week to 2 weeks, basically. Something like that, from when the setup actually fires off. Now, in this case, it's actually remiss of me not to be going over the downside first, because as you can see, the daily stochastic is continuing with its downside pressure as long as Bitcoin is closing below 28,300 now. So as long as Bitcoin is below that number, this will continue to remain to the downside, and that would imply that, well, when volatility expansion inevitably is going to be happening, then, well, it would be more likely to the downside than the upside. I should probably just show you the results right here. Out of the past, this is like the last 4 years. There's actually been several more iterations on this one, 20 to be exact. And out of 2070 played out a pretty massive downside move, giving it about a 70% strike rate. So a little bit less than the daily, obviously, but still pretty damn high. And an average return very, very similar to the daily at just below 20%, standard deviation of about a little over 8%. So giving us ranges between the low teens to the upper 20s in this case. Anyways, the average time it took from setup firing off was about 11 days. So again, very much in alignment with what we see on the long side. But for right now, that would suggest that if things were to expand from here, the downside would be more likely actually. And where essentially would we be looking towards as far as price action goes? Well, again, it's kind of difficult to do before it actually does fire off, but shaving off about 15% from current price action puts Bitcoin, a little bit below $25,000 or so. So I do think that would be at stake if we saw volatility expansion from here. Now, due to a lot of other things on the higher term timeframes, I actually don't think that's more likely. I think that a short-term downside move is probably more likely, and then continuation to the upside. But again, as long as it's pointed down, my opinion, is not relevant. The stats do show that, the downside would be more relevant in this case. But if Bitcoin were to flip back around, or at least hold sideways here, because the longer that Bitcoin holds sideways here without breaking down, and when I say breakdown, I mean, daily closures below at least $27,000. But the longer that it holds sideways here, then the more and more time gets chewed up by this, and naturally the daily stochastic will start to level off, and it will start to turn back up, or at least it'll be a lot easier. So again, the sort of idea here is that the longer that Bitcoin trades essentially sideways without breaking below at minimum $27,000 on a 12-hour daily time frame closing basis, this will naturally have a bullish reset, and we will see the upside become more likely than the downside. But that's still going to take some time, obviously. As of right now, Bitcoin's about $300 from that daily pivot, which is not much, but ultimately it's not just that. It is, of course, first and foremost, the volatility expansion, which we have not witnessed just yet. So right now, this setup probably going to be maturing maybe over the weekend. I would say most likely like Monday, Tuesday, maybe out to Wednesday at most. But ultimately, somewhere around there, very, 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 very likely we start to see this one fire off, and that is likely to take us into the next 2 weeks of price action, which basically takes us to the end of April. And you're going to be looking at, either somewhere back down around about $25,000, or to the upside. On the average, we were looking at like 20% or so. Which would put Bitcoin between like $32,000 to $33,000. That is also, of course, where the top side of the weekly Gaussian channel for CME and spot price action are coming in at as well. So that would be kind of like a natural area to be looking for. And while we're on here on the weekly, we should also denote that while CME will close today, it still remains above the mean band here, the same mean band that's been rejecting this and living under ever since March of last year. And just generally speaking, anytime that Bitcoin has reclaimed the mean band, it has gotten a free ride to the top side of the Gaussian channel, which again is in that 32 to 33,000-ish range. Depending upon where you kind of approach it from, and that becomes, or not becomes, that is again more likely, historically speaking, as long as Bitcoin again remains above the mean band, which is around $27,000 actually. And again, you can kind of see the relationship several times over the past history of Bitcoin, where basically Bitcoin, has a nice little closure above the mean band, gets a free ride to the top side of the band, usually has a bit of a reset after that, pretty big crash, if you will, 20 to 30% in many cases, and then continues onwards and upwards in most cases as well. So ultimately, that is, still kind of what I'm thinking most likely to happen. And looking at the weekly right here for spot price action, you see that Bitcoin corrected exactly down to the mean band. So far, so good, and holding up above it. And wherever CME closes today, likely to massively influence where spot closes on Sunday for the weekly. But right now, so far, so good. Anyways, moving on now, we can also get into, of course, the ranges from the HPDR indicator perspective. And actually, I'm throwing up something a little bit new for the HPDR. This is something that's being worked on in the background. It is not ready for public consumption just yet, but it will be at some point. I know we're gonna get some emails about this, but don't worry. But it is this cone over here of probabilities based off of the historical ranges, which is hilariously good so far, but still some work to be done, I do think. But here's the thing. If we go back into the daily or even the 12-hour, in this case, I do think that we could use this as well. And let me just get rid of these for the moment being, although they do still work on this, obviously. We can still see that the current range low coming in around, minimum 27,000 bucks on a 12-hour, or daily about 26.7, still going to be showing that sort of initial major threat of a downside, meaning that, hey, if Bitcoin is going to be breaking down, that would be like the big red flag to me that say, hey, if Bitcoin starts to close below this region, very likely at that point, we're probably going to see somewhere around 25, maybe a little bit below 25. And then I really want to reassess after that. Of course, there's going to be bounce along the way on the lower term timeframes, but as you can see, things haven't really changed there much over the past week, or actually over the past couple weeks now. But that same token, the median of the 12-hour range at about 28,600 or so, would still be indicative of a range resolution to the upside, and very likely Bitcoin, tries to move north of 30,000 bucks after that. And at that point, you have to start to be looking at this chart over here and say, hey, this setup probably going to be a lot more angled towards the upside, obviously, as everything would start to turn up from here. And that probably gets another, 10 to 15% move from that region, of which, that puts Bitcoin into the low 30,000s, which not so bad. Anything else? Should I get into anything else right here? Yeah. So in the short term, I do still think that Bitcoin has a potential for a nice little short-term dump-ola party. Still, as long as daily momentum remains to the downside, pressure is to the downside, and the daily for CME is showing pressure down below 29,000 bucks. 12-hour time frame is also going to be, nosediving here below 28,800. Quite far away from current price action, to be fair. 6-hour time frame also down below 28,300. 4-hour time frame also down, as long as Bitcoin's below 27,900, which actually right now it's above, so that one's probably going to flip around. And then the hourly is also going to be down below 28,200. So yesterday, just like today, it's like, hey, if Bitcoin is going to break down, it happens very likely in the near term. So again, the picture that I'm painting here is that the longer that Bitcoin trades sideways here without breaking down, it's naturally going to turn back up. We're very likely going to see the probabilities favor the upside. And again, a breakdown at minimum needs to be a 12-hour or daily below about 27,000 bucks, at least below that range low in the HPDR indicator. Until then, all short-term downside moves are just that, short-term downside moves, while waiting for a bit of a bullish reset on this indicator right here. But until we actually get that, again, in the short term, downside more likely, and corrections can easily come down to low $27,000. Similar to what we saw early this week. Wouldn't be out of the question to see some, like that again, maybe over the weekend, or maybe even today on Friday. Anyways, I think that's a good place for me to be leaving off on this particular video. As always, I want to be wishing you the best. Take care, much love, and see you hopefully soon.